Hello, everybody, and welcome back to Fresh from the Trollbox, the BitMEX Trader podcast with our CEO, Stefan Lutz, who has been visiting Proof of Talk conference in Paris this week and has met with many interesting traders and VCs. So he's going to share a little bit from that, as well as we've all read it, the FOMC news and greater macroeconomic environment that we've seen. And unfortunately, him and myself were wrong last week. We did not push through the next mid 70K range on Bitcoin, but it flipped around and we find ourselves at 66,900 at this very time. Hopefully, we'll see a bit more movement coming up in the next couple of days. But as always, we want to ask Stefan, how was your week trading, Stefan?
Disappointing. Yeah, hey, I mean, we speak about a lot and a lot of fun, but this week was really disappointing because I was, as you say, I was really expecting the breakout to higher levels. And we can look at the chart in a moment. Unfortunately, It didn't happen. Macro environment and news weren't strong enough to support this. And now we basically hit the resistance lines, and we're moving now in the higher 60s as a range. I mean, which long-term, mid-term is pretty positive still. So no false hope here. But you see it here. We broke basically the short-term trend line, but the yearly trend line for this year is still intact. So, but we will linger probably quite a little bit longer around the mid-60s level to then test the support line and see whether we still go up, right?
Yeah, let me show, I guess the longer term, right, is really this blue lines, and we can see here we're very well in the trend. It keeps hitting the top at the 72 range-ish. And that is persistent now since March, really. And then if we go, as you said, into the shorter time frame, where last week we were expecting a little bit of a breakthrough here, right? This is when we talked last time. But then unfortunately, it couldn't break through the trend and it came back. And now we find ourselves actually back to the lows of the week before. So no emergencies yet, I think, but unfortunately, not new heights. And I guess asking you...
Sellers playing that. I mean, depending on which side of this discussion you're on, sellers playing it very well from my point of view. I mean, they're just injecting Bitcoin into the market every now and then when we start to break out, but they don't break the trend. So I think they work very consciously here. So this is why I'm, let's say not still, but I'm optimistic. And anyway, long term, we come to that in a minute. I see for the end of the year quite some positive news for Bitcoin coming.
Nice. So just a very quick comment on the derivative side. We don't see any major hikes in the funding rates, which means the market is generally quiet. There's no strong indication in the market for one or the other side. Funding rates are pretty normal across the tokens, really. And with that, and with the macroeconomic environment also being relatively unchanged, really. I mean, the FOMC this week was what everybody had expected. I don't think anybody expects a rise of U.S. government's interest rates anytime before October, the earliest. And so with that, what is it actually, Stefan? What are the news that you think will bring us to new heights here? In the past, I would say the past bull runs, we've always looked at adoption curves. But by now, I feel any person has heard about Bitcoin. Many people have adopted it, and some people adopted it as a token. Some people adopted it through the ETFs now. So adoption seems to be a less strong narrative. What do you actually see as maybe evolving the big narrative? And also looking at the discussions you had this week at Proof of Talk, what is sort of the large investors' scale?
As you say, the grain of salt really is real adoption, meaning more people using crypto directly. What we see is more adoption by people who are already in crypto. So in terms of investments or usage, people that have used crypto or invested into crypto allocate more of their wealth into it. So let's say if you have allocated 5% previously, you might now allocate 7.5 or 10%. But that's not really doing the trick, right? Because everyone behaves in the same realm, basically. If I believe Bitcoin will go to 100, yes, of course, I slowly build my position. If you believe it's stable, you do less, and so on and so on. So you don't have those spikes that create the actual volatility. And you see that even in terms of the relative performance. I mean, if you look at a 7-day performance, like Bitcoin is more or less, although it's not as we would hope, like this one of the more stable assets, like down roughly 6%. If you look at, I just need to look, like Ethereum is down 8%, Solana's 14%, Doge 11%. I mean, if you still trade Aether, it's 9%. So it's all in the classical behavior that we see. So that means same people doing the same, maybe a little bit more. What we have, and we have spoken about that already, and this is the basic sentiment from Proof of Talk as well, institutional money is here and it's here to stay. However, it's not where the individual adoption is now. For example, if you or I, we allocate a very significant percentage of our wealth into crypto because we're crypto believers, we're Bitcoin natives, and maybe some others allocate like 5-10% of their wealth. Real institutional TradFi players maybe do 5 bips, 10 bips, right? I mean, they just play around with it, and it will take a long time until they really drive up their allocations. What is interesting there as well was the message, hey, you crypto guys, you crypto natives, you're very impatient. But look at performance of Bitcoin so far. I mean, from the moment that the rumors were out that Bitcoin spot ETFs will be approved until now, I think we're up like roughly 70%, which is a big thing, which requires then a little bit of a pause, especially if you have institutional money in. I mean, institutional money likes clear trends rather than high volatility, whereas people like us, we like high volatility. I mean, the trend is nice, but high volatility is nicer, especially for a derivatives trader. So this is it, and everyone expects, in a way, more to come after the US elections. Not so much because there will be real news or something very specific, but if you look at the options, so if Donald Trump will win the election, you will see that there will be a lot of, let's call it, anti-establishment movement. And with that, what's the right English word? So they will accept that more and more money will be allocated into crypto. Not completely overthrow the current system. I think people who believe in that overestimate even US election results and what it will mean. But we will see that even more corporates will adopt corporate treasuries in Bitcoin, like MicroStrategy, for example, right? Or to a certain extent what Tesla did before. And there will be more inflow of that. Number two, more asset managers will go into that, and with that driving the adoption. And number three, which is even more important, it will make sure that especially Bitcoin is there to stay. And that will then develop over a longer period of time. So I expect that the election will be news that we will all trade on. I mean, before the election, I think everyone will be quite cautious because I think it's a very close race. I mean, depending on who you speak to, it's different voices. But I believe it's not like 80% clear that Donald Trump will make it. I think it's pretty likely, but not like 80-90% or so. You never know what happens. So this is why we don't see the trades right now. We don't see people positioning themselves now. It will be more around election day. And once we have the situation, we will see it. So for me, the FOMO side of things basically is around election day. So unfortunately, I think summer holidays will be pretty dull in terms of actual news or so. And another thing is which is interesting, if Donald Trump wins, it will be probably his policy to spur and to accelerate domestic economy. And with that, if you look at the real economic numbers, the domestic production is already very much up. So the economic indicators in the US are much better than the sentiment. And if you then add fuel to this, this means we will see more inflation, even if you hike interest rates, but there will be more inflation, which is good regularly for Bitcoin as well in particular. So this is why I believe, and it's in a way shared by many people that election is really the next big news. We will monitor FOMC meetings, of course, but in a way, no big expectation that a lot will happen. It's more like fluctuating around the expected values. So it's really election day, and around that day, I guess we will have a lot of volatility and good opportunities for trading.
So it holds true, the good old saying on Wall Street: buy in May and go on holiday. Not much action you expect over the summer, and then macroeconomics really driving the power of the market in, say, the September towards November timeframe, so Q3, Q4 really. Can I ask a question in terms of positioning yourself as a trader between, say, stocks and crypto?
Yes.
It feels a little bit like the stock markets are racing all-time highs week by week, and in crypto we are kind of stuck. How would you see this? So should I maybe flip into Nvidia? Should I flip into US tech stocks? Do you think Bitcoin and alts will chase them, and in fact, because they are the inflation hedge, outperform them by end of the year? What's your take?
Again, it depends on where you come from. If you invested already in crypto and in Bitcoin, like during the crypto winter, right, building up positions, I would keep them. And I do that. I mean, basically for me, I increased over the last 1.5 years my allocation into crypto significantly. And I'm pretty happy with that, just physically. Derivatives is like the short-term trading, but I'm pretty happy with how it developed. And as I just said, I have quite some optimism about my position, so maybe a little bit degenerate, but this is what I think. So I hold on to that, and every time we go like around the regions we are now, like 65, 66, I start accumulating slowly positions. So that's it for me. If you look for, or if you are not that long term here, so you haven't had that uptick like since especially the rumors about the ETF approvals, you might want to do something else. And it's true, if you want to accelerate, if you look even for more, let's say, positively, hopefully volatile options, I would go still into mining stocks and into Nvidia, because they usually are an accelerated version of Bitcoin. So if Bitcoin is expected to go up or goes up on a continuous trend, they perform much better because they fuel that. It's like selling the shovels for the gold rush, right? But the same way, if it behaves negatively and the sentiment is negative, they underperform. So it's a matter of your expectation. If you share the expectation that it will go up further still this year, and people gearing up for that, it makes sense to add a little bit of Nvidia or some miners that perform well or have underperformed but are very solid in the market for the next month to come, just to have some spice in your portfolio. I mean, general tech stocks. Personally, let's say, I mean, this is just very personal. I'm not a big believer in that long term, because I believe that the big GAFAs rather will face some challenges, especially from AI trends, which are very expensive, and we haven't seen really the new business models yet. It's more an investment case, and I guess there will be kind of what is disappointment in between. It's just usual. I mean, in those cycles, like you have the irrational exuberance, and then you dip, and then you have the right trend. So I think we still will see this, and because of the global trade wars that are intensifying, at least from a Western perspective, you reduce the number of people that can use your services. So I'm cautious. I'm not. I mean, I think they have a great business model, and it is still the thing for the next years. But short term, I mean, not in my portfolio. But it's just me. I mean, everyone can do their own research and have their own expectations. That's my expectation.
As always, no financial advice, DYOR. But that has been very insightful. Thank you very much, Stefan, for putting it a bit into perspective for us. So we take it, investor sentiment in Paris has been, institutions are here, institutions are slower to allocate. you personally think the bet on crypto really is decided at the US elections, whether we'll see a 2024 all-time high and how much that would be. That we have to wait and practice patience until November. And in the meantime, everybody can look around and see if they find a stock that is interesting, or as always, trade with maybe a single-digit number of leverage and just read the market rather than wish for news, right? I mean, there's a lot of, as we showed in the beginning, there's a lot of chart analysis and sort of chart trading possible these days, and I think especially on BitMEX, we enjoy that, and myself particularly, I think I've had good weeks with this, so I can't blame. I don't hate the range. It helps me to stay focused. With that, thank you very much, Stefan. Have a great weekend, and talk to you next week.
And you. Speak soon. Bye.
Bye.